It's quite a big one today, and I'm going to kind of talk through some possibilities, some scenarios, and from there we can kind of make a decision what we want to do for the rest of the year. We are, as you can probably tell, we are slowing down, okay? Market volume is reducing. If you think about it, if you've been a big institutional trader, you've been at your trading desk all year and you've made yourself $10 million, you're probably sat there thinking, do you know what? The markets are slow, volume's low. Got FOMC coming in, we don't know what Powell's going to say, we don't know how that's going to affect the markets. I'm probably just going to take my foot off the gas a little bit. And you're probably all feeling that a little bit in the markets right now. Now, this is always a funny week, this kind of second week of December, because we usually always have an FOMC. And, you know, look, you don't need to highlight to you guys, you've probably all seen it. You know, the markets are very choppy and very back and forth. And, you know, not doing a huge amount. Like if we look at our daily candles, for example, okay, they're just kind of chopping up and down and chopping back and forth since kind of Thursday last week. Had, by the looks of it, a bit of a continuation. This is possibly just a bit of a positioning move for FOMC. I still quite like, oh, you can't see anything I'm doing, can you? Sorry, guys. So yeah, daily candles here, look, okay. Obviously just chopping up and down, chopping back and forth. We've had this bit of a pullback now, okay, and created that 2-hour, 4-hour FB. So we've definitely got some validity in this trap, but I would hazard a guess this is more of a positioning move right now, just to get ourselves into potentially some higher prices to go lower. But you know, anything could happen in these FOMC meetings. So who has a good understanding of what's going on at the moment with FOMC and what we're expecting and that sort of stuff?
Expecting them to announce that they're dropping the interest rate by 2.5 basis points.
25 points, yeah, 25 point cuts is expected. Anything other than that will cause a lot of volatility. It's pretty much guaranteed at this point. It's like, I think Reuters are printing like an 88% chance. So sorry, CME put like a market watch out, and they put like predictions out. Effectively, they're normally pretty accurate. So 88% chance at the moment that this is going to happen. So kind of going into FOMC today, we are expecting a rate cut. What will happen if we get the 25-point rate cut?
Not a lot, should it? Because it's already been factored in.
Yeah, exactly right. We knew about the rate cut back on the 15th of November, around this sort of time, okay, and the market has just been dropping and dropping and dropping. So this is what, when people talk about pricing in, this is what they mean, okay? The market has been pricing in this cut. So the fundamentals for the dollar are pretty crap at the moment, okay? Let's just go through our analysis on EU. This will give us a good indication of, you know, kind of what we can look at here. So Reuters, if you want a really good kind of economic outlook on, you know, what's going on, Reuters is a really good kind of news terminal. So financial markets expect a 0.25 percentage point rate cut. Fed divide over future rate reductions may spur hawkish turn. So basically, the summary is that the rate cut's going to happen, and if that happens, you won't notice. There's always going to be volatility because it's FOMC, but it's not going to cause a huge impact in terms of overall direction or movement if they cut. What we're waiting for, okay, is waiting for Powell to give us an outlook on what they plan to do next, okay? So there's a report that comes out alongside this called the SEP, okay? I'll show you. SEP report, okay, which is the summary of economic projections. And what this report basically says is a long-winded report. You can go and have a read through of it. What this report basically says is it explains what the economic outlook is for that currency, okay, in this example for the dollar, okay. The Federal Reserve will cut interest rates by 24 points, as widely expected, aiming to support the labour market amid sticky inflation. Powell's press conference is basically, this is talking about the signals to what is going to be happening next. It's already priced in, as we know, okay? And we're basically waiting for Powell to come back and tell us what he expects to happen next. Blah, blah, blah. So yeah, so the point cut may come well with non-committal or even hawkish approach to next year's rate path, given the division among policymakers between those skeptical about the need for more rate reductions in the face of still elevated inflation. So basically, inflation's higher than it should be, okay? They want to bring inflation down. Every country on the planet has an inflation target of 2%. Does anyone know what US is at the moment? Last Friday we got the results. Okay, so inflation rate at the moment is at 3%, and if you look at it over the last year, it's been struggling to come down. So they're aiming for this target. The closest we got to it was in April, which was 2.3%, and it's been rising since then slowly, okay? They want inflation at around 2%. So what this is saying is that still elevated inflation, okay, and those who feel the economy and job market will weaken if the US central bank doesn't bring down borrowing costs. So if Powell confirms that they're going to maybe put another 50-point cut in the new year, okay, over maybe a few months, then what will happen is the dollar will drop, okay, because it shows weakness in the economy. But Powell's job is always to make the economy look good, okay, which is why you have to kind of read through what he says. So what you can do, when tomorrow morning, you can type in FOMC Powell summary, okay, and it will bring up, let's see if that's an old one. 23rd of June. Yeah, so it'll bring up basically here. Past testimony. No, I don't think that's what I'm looking for. I'm probably only going to get recent ones. Basically, the day after, if you Google this, it will give you a... Yeah, these are all meeting previews, unfortunately. I'll show you tomorrow, okay? But it will give you a guideline on what Powell said. Powell's job is to make sure the US economy is doing well, right? Okay, so he's never going to be too hard on, yes, everything's shit, inflation's too high, we've got to cut interest rates, GDP isn't growing, all this sort of stuff. So what will happen is usually it will be kind of mixed in. There'll be like an undertone, okay? It's really boring. There's no point in watching the whole thing. My advice to you is wait until 8, 9 o'clock and then do a quick search, and someone somewhere on some news terminal will have summarized what Powell has said. The key things we're looking out for is how is he going to get inflation down, okay? And are there going to be any more rate cuts, okay? How can we get this economy booming again? And the market will react to one of those two things. How the market reacts is a massive question mark, okay? And that's why the best advice is just to not trade FOMC. If it's particularly bad when we've already got a bearish tone, it will fucking collapse. You will see the dollar absolutely collapse, and you'll see safe haven assets like gold, please cross my fingers, okay, shoot up. 4.4 is in trouble pretty soon. That's just a matter of time. And if we do see some rate cuts, okay, if it is indicated that there's going to be some rate cuts, all-time highs will be easy. I think 5,000 on gold isn't too far off as well, okay? This will keep climbing and climbing and climbing. Then we'll see what's happened on silver recently. Okay, all-time highs on silver. Silver reached 61.5 or 61.6 yesterday. This morning, which is just nuts. Okay, and silver is leading the way in terms of precious metals. So usually what happens with silver is that they'll generally kind of, the trends will be similar to gold. What's happening right now is silver is like really leading the way, and it's kind of pulling gold along. Gold at the moment is just waiting for this Fed announcement, okay? And what's happening at the moment is money is flowing out of gold and into silver, which is why silver is climbing. Silver is like the safe haven asset at the moment, okay? So how we operate tomorrow and the day after is really, really dependent on the market and how it reacts to tonight, okay? And again, this is the hard thing to get your head around. News can come out and it can be really bad for an economy, but price can rally. Because what will happen is price will rally to gain some better positioning, grab some liquidity, fill some higher prices, and then the markets will drop off the back of that, okay? So it's really, really important to understand that even if the Fed's tone, Powell's tone tonight is like we're going to cut rates. It's all looking bad. If the dollar starts climbing, just use your common sense. And that's one of the things I've learned, is that use your common sense. If something is really bad for an economy or is perceivably bad for an economy and price is climbing, work out why it's climbing. If it's in poor value, it's climbing because it wants better value, and then it will sell off. Okay, good example is when Trump announced the tariffs, which is bad for China economy. And what's bad for China is usually bad for Australian dollar. But the Australian dollar climbed. It had two of its biggest days the following 2 days it had in like months. And the reason why is investors knew this was bad for Australia. They knew the Trump tariffs were a bit of kind of smoke and mirrors because, you know, he, as you saw, can't put them in place straight away. And investors were positioning themselves for a big sell-off. So they were buying the Australian dollar. The market responded positively to that because the play is to get into the highest possible price so that when the if and when the tariffs come in, the market will collapse and then they're at a premium pricing. So it's always worth trying to work out what's happening and where price is going to head next. Okay, and you just have to use a bit of common sense and a bit of research with that. I'll be paying close attention to what's happening tonight. I'll be on a boot camp call until after the FOMC announcement. So boot camp guys, we might get to see some of it. But we'll know more after the market has reacted. Long and short of it is anyone in any trades right now? No? Nobody? Not in any positions?
I'm in a 0.5% gold long, Chris.
Okay. If you're able to take the risk, leave it in. But if you're similar to me and you're in and around break even, I would close that position because you could quite easily be slipped out of the marketplace. Okay. So just be really, really cautious if you are in any trades and you're in and around break even. CFS short, USD CHF short for you, Lou. Yeah, okay, fine. I see it. You were in from a little bit higher up, weren't you? I think you were in from this morning, Lou.
Chris, just while you're waiting to hear off from Lou, I'm guessing, I think she said she was in the car.
Yeah.
Did Fed press call?
Oh, it's that Scottish signal again. I think you guys are still on dial-up, aren't you, up there? You got to plug your phone into the wall socket if you want to use the internet, Louise. Yeah, you have to plug it in, mate. You have to plug it in.
You put a trade on earlier. It was quite high up, to be fair.
Thank you. I've been on it.
You'll have to put a couple of quid into the meter, mate, because it's not working. I don't think you've paid your
Sorry, it's been
internet.
a long day.
Or someone's on the landline at the same time. I can't hear a word you're saying. There's no point in you keep talking, if I'm honest. Yeah, we couldn't hear you, Lou. I'm sorry. Message me and I'll have a look at when I get off the call. Yeah, I'm pretty sure I saw Lou's trade earlier. I'm pretty sure she was quite high up in the position. Yeah, there. Yeah, I think, Louise, if you can still hear me, I think you'll probably be okay. And hopefully you eventually make some profit so you can get a laptop to share your analysis on instead of that bloody screen on your phone. I know you're busy today, it's fine. Yeah, I think you're in a good position. So anything like that, where you're taking a trade like this, for example, okay, anything like that, you know, I'd be happy to hold that position because, you know, you're sat in whatever profit. Hopefully you've taken some profit off by now, and that's the perfect sort of opportunity. So a trade like that, the way I would handle it is if I hadn't taken off profit, I'd be taking off about 80% of this trade right now. Depending on where you're sat in it, I think you'll be, yeah, I think you must be, yeah, you've got to be almost 2 to 1, 2.5, 3 to 1, something like that. That would be a perfect example of a trade that I would keep in. And then what I would ultimately do is I would close off 80% and allow the remaining 80% to run. So if you do get a nice push, you might double up. And if you get stopped out, you probably will be okay and just get stopped out normally. Again, it's very unlikely anything particularly surprising is going to come out. We're much more likely to have a reaction today rather than a big slippage this evening. So someone was saying something, Hawker or someone maybe. Someone was saying
Still, I
something.
think.
Who? Oh, Phil. What were you saying, Phil?
Sorry, mate. I typed a question in the chat. I was asking if the Fed press conference at 19:30 usually has a further impact, or is that just
That's
like
the
a
Powell
wash up?
speech.
Right.
So FOMC, we get all the stats and the data between 7 and 7:30, and then 7:30, that's when Powell comes out and fucking just fucks shit up.
But yeah.
So we're waiting for that basically. So by 8 o'clock we'll kind of know. I'll be jumping on. I'll be having a look. Anything I find, obviously, I'll share with you guys. Go from there. Just going over a couple of trades. Excuse my very messy chart. I've got a little bit of journal I still need to get done. Uncle Jerome, yeah, fucking prick. So all in all, US Swiss has been, having a pretty good week. We had a really lovely buy here on Monday. I didn't take that trade. It's just a little markup from me. Actually, I completely lied to you then. I did take that trade. Absolute liar. I only took a little position on it. Tuesday's been pretty shit, as you can see. Really choppy. Anything I made on that, I gave back on Tuesday. Again, perfect example for me. I sat around and me and Sam were talking about it. I was like, this is why I don't trade Monday, Tuesday, because it's just fucking shit. But look, the initial position was good. We ultimately took out that liquidity level. And I think I put a post up somewhere about the fact that I think one of you was looking for potential buys from here. And the comment I came back with is just be cautious of the fact that we've failed to make a new high. And because we are quite high up and overall the dollar is bearish, that this could just be the positioning move that the USD Swiss needed to go short. And that is what happened. Yeah, no problem, Callum. Cheers, mate. One of the things I did also note as well is, so I was looking at along today, just in line with the current momentum. Lou, I will get back to you at some point. When you get your laptop, I think I messaged you earlier, make sure you put your analysis in, because I want to understand your analysis on the short. I love the position ultimately. I don't 100% agree with the momentum, but look, we can't argue with it. I think you've been lucky with that one. I personally can't see the bearish momentum. All I can see at the moment is a first break. That's not to say there's necessarily anything wrong with your trade, and I'm always very cautious what I say on a winning trade, and there's no argument, it's a beautiful trade. And I think when you factor in multiple things like failure to make a new high, external liquidity taken, internal shift, you have, to be fair, actually, you have here got a first break, and then you've got an internal FB and an internal TB. So there is, to be fair, there is quite a bit going on there. We have got a valid shift pattern from an external level. So maybe that does actually make quite a bit of sense. Nice little breakdown, new structure, pullback, retest. Yeah, okay, fine. Yeah, okay, cool. Yeah, I think I kind of worked it out when I was kind of talking it through. Yeah, to be fair, a lovely little position that. Could have gone either way, admittedly. It could have climbed off that first break, but look, you caught it well. Yeah, FBF entry. Yeah, really, really nice, to be fair. And it's always frustrating when I think those of you who watch my analysis, I've been calling that daily level out for quite some time now. It's always frustrating when I take the opposite trade and somebody else catches it off a position that I've already planned. But that's the thing, that's the difficulty with trading sometimes, is that they can go either way. And sometimes we catch them right, sometimes we catch them wrong. That's all part of it. So well done, Lou. That was a really, really lovely position. And yeah, welcome your profits, definitely. That was a nice position from this morning as well. I didn't take that one. That was just, I missed that one. So I wasn't even looking at it till about 9 o'clock. Lovely little risk position there. But again, very, very similar, right? You can often get, and this is a good example of where the overall momentum of the marketplace will take over. If we look at this structure here, we had this bullish structure. Can't remember who I was talking to. It was either Pete or someone else, and we were talking about how kind of corrective this pullback was, how balanced it was. There's no kind of inefficiencies. It's just really corrective. No one's really in control. There's a little bit of selling pressure. It's pulling back, pulling back, pulling back. And usually what happens in these moments is the market is looking for an excuse to go long. Okay, and basically what happened here is the market found that excuse. It tagged into discount pricing, met its EPA, rejected initially, pulled back, failed to make a new low, internal shift, pulled back, and now is continuing long. Now, if it wasn't for FOMC tonight, I'd be with all of you on the train saying this is a long market now. Let's just jump in and find some buys on EU. Unfortunately, we can't be that hasty. We have to be a bit more careful and a bit more cautious because it's very, very probable that the market does this. Because it hasn't yet grabbed that discount pricing, the extreme discount. It's very, very probable the market does this and then that. Okay, I'd be here for that all day long. Equally, it could do this. Equally, it could do this, and equally, it could do this. Okay, it's a big question mark, which is why we try to avoid trading into it. Anything could happen. The market could react in any way it wants to. All right. So just be cautious if you are in any trades or looking at any trades. Just be cautious this evening. Wait until FOMC comes and passes, and we'll go from there. All right. In terms of kind of news and economic factors, we've obviously got the interest rate decision today at 7. We've then got the monetary policy statement at 7:30, which is the Fed speech. We've had a few kind of factors this week. Go to the news feed. We've got a few kind of, what did I see earlier? We've got, in terms of Switzerland, there's quite a bit going on in Switzerland at the moment, so just be conscious of that. The reason why the Swiss franc is kind of all over the place is because there's a lot of volatility in Swiss. We had some pretty shit, I think it was inflation data from them. Inflation came out at like 0% or something like that. I think it was inflation, and that's what caused USD Swiss to be particularly strong. How many of you have been spending time on FX Street and kind of reading articles each day? Anybody? Nobody. Oh my god. Nobody at all. Nobody's done any.
No, mate.
I have to be fair. I usually do.
Good man.
I do find it can fucking spin my head out a bit though if I'm taking too much info.
Yeah, just
I try not to dive too deep into it. Otherwise,
just my best advice is just spend some time every day reading. Okay, 2, 3, 4 articles, whatever you want to do. Okay, and try and work out the themes. So what is everyone talking about? Because what everyone is talking about is what's influencing the markets. Okay, this is a good article. So yeah, we're looking for obviously the Fed rate cuts. I think this mentions about the SEP. Yeah, so along with this interest decision, the Fed will also publish the monetary policy statement alongside the revised summary of economic projections. So what the SEP is basically going to do is it's going to tell us what the projection is for next year, for 2026, okay, and what basically the advice is going to be for Powell, because Powell's term comes up in March. There's another big thing that's going on as well, because does anyone know who Bisson is? Yeah? No? Who is he?
Crypto guy.
Pardon?
Is it the crypto guy who's replacing Powell?
He's basically he is Trump's administrator who is looking very likely to take Powell's chair in March. Okay, and basically, if this one gets in, the market is going to fucking tank. Like, we'll find out in March who's going to be taken over. If the Trump administration get into the board of the Fed, then the dollar's going to fucking tank because investors are going to just shit themselves. Trump is an investor first and foremost. He's a businessman, and he's going to want his business. He wants his business valued as cheap as possible, okay, so that he can buy loads of shit, all right, and make fuckloads of money. Okay, that is what Trump is ultimately doing. He's looking at this as a business venture, all right, and he wants it as cheap as possible so he can buy loads of shit and make shitloads of cash. Exactly what he did with the equities market and the stock market. It's a good day to buy the dip if anyone remembers that tweet. Okay, gold hit his all-time highs. You know, he is a businessman and he knows how to manipulate the markets. And if Bisson gets into the Fed, the dollar is fucked. Okay, it's going to absolutely collapse. It's great for us. Okay, we don't have to stress about it too much. Investors will scrutinize details of the SEP in case new projections point to at least 2 more rate cuts next year. That's what I mentioned earlier about potentially another 50 points being cut. This could be assessed as a sign of a loser policy moving forward and hurt the USD. Conversely, the USD could gather strength and drag Euro USD lower if the S&P shows a single cut in 2026, which is what the September S&P showed. So basically, it's all about like predictions, forecasts, and comparisons. That's kind of how the market reacts. We know at the moment that the S&P in September has shown one more rate cut in 2026. Well, the talk at the moment for the kind of the start of this week has been based
Gold's flying, Chris.
Good.
Yeah. Oh, why is it on mine but not yours? Refresh your screen.
Yeah,
My price is at 4211.
Might just be catching up.
Yeah, I'm still in that trade and can confirm it's flying.
Oh yeah, it is fine. Hello. That's some money, isn't it?
Why is it not updating on TradingView?
That's the Oanda feed. So it could just be a block in the data coming through ultimately. So yeah, so interest rate's been cut. We knew that. So there's nothing to worry about there. So it's basically we're waiting for this SEP announcement now. Okay, come on, you little fucker.
Come on, you little fucker.
I want that trap. That's what I've been waiting for. I want that trap. Basically, if we can hit that trap, which is what I want, let's just say I'll be a very happy man. So will Anna and the family. Anyway, what were we saying? Where's my news gone? Here. So SEP here. They've planned a 25-point rate cut, okay, for 2026. If the new SEP comes out and it says a 50-point rate cut, so 2 more cuts, then that will cause further dollar bearishness as we've seen. Okay, so let's just wait and see what happens. And yeah, just stay safe out there, guys. Everyone's doing all right. Phil's doing all right. His gold trade's still good. Lou's doing all right. Your USD Swiss trade's all good. But remember, it's not this bit that causes the biggest impact. It's Powell at 7:30. Okay, so if you see some nice profits between now and like 20 past 7, take some profits out would be my advice. All right.
Sweet.
Cool, guys. All right, boot camp lot. I'll see you on the boot camp call. I'm just going to run to the loo quickly and then I'll be back 2 minutes. All right.